Welcome to Crypto Journal. If you value intelligence on real-world blockchain integration that mainstream media ignores, hit like right now. And if you want exclusive analysis on enterprise adoption patterns before they become obvious, click join next to subscribe, select the Plan Club membership. Let's expose what's happening in US supply chains. While everyone debates which blockchain will dominate payments, something interesting is happening in American supply chains that almost nobody's noticed. Zebec Network, the streaming payment protocol processing $300 million annually, just acquired school payroll services, serving hundreds of US charter schools. They partnered with Azure HCM, serving 4 million customers across America, and they're processing real-time payroll for over 10,200 employees monthly through US businesses. This isn't theoretical blockchain adoption. This is operational infrastructure embedded in American supply chains right now. Today, we're exposing how Zebec quietly integrated into US payroll infrastructure, why streaming payments solve critical supply chain finance problems, what school payroll services and Azure partnerships reveal about enterprise strategy, and why US adoption could scale faster than anyone realizes. This is 22 minutes revealing the supply chain integration nobody's discussing. Let me start with what supply chain finance actually means, because understanding the problem reveals why Zebec's solution matters. Supply chains involve multiple parties: manufacturers, suppliers, distributors, retailers, all requiring payment at different stages. Traditional payment infrastructure processes these transactions in batches: monthly invoices, net 30 payment terms, weekly payroll cycles. This creates cash flow problems throughout the supply chain. A supplier ships goods on January 1st but doesn't get paid until February 1st due to net 30 terms. They need working capital to cover that 30-day gap. Small suppliers often can't access credit, forcing them to charge higher prices to account for delayed payment risk. This makes entire supply chain more expensive and less efficient. The payment delay creates financial friction, costing businesses billions annually. Zebec's streaming payment infrastructure eliminates this friction. Instead of monthly invoices and net 30 terms, payments stream continuously based on work completed or goods delivered. A supplier ships goods on January 1st and receives payment immediately, not 30 days later. Working capital requirements decrease. Credit access becomes less critical. Supply chain efficiency increases. This is real utility solving actual business problems. Now let's examine the school payroll services acquisition specifically, because this reveals Zebec's US integration strategy. School Payroll Services operates across hundreds of US charter schools, processing payroll for teachers, administrators, and staff. These aren't crypto-native users. These are traditional employees receiving paychecks every 2 weeks through established payroll systems. When Zebec acquires School Payroll Services, they're not replacing the entire system. They're adding streaming payment capability underneath existing infrastructure. Schools can offer teachers the option to receive earned wages in real time instead of waiting for bi-weekly paychecks. Teachers who need money today for unexpected expenses can access already earned wages immediately instead of waiting until next payday. This is similar to services like Daily Pay or Earnin, but built on blockchain infrastructure, enabling lower costs and instant settlement. The school continues using familiar payroll interface. Teachers get optional real-time access to earned wages, and Zebec processes payments on blockchain rails invisible to end users. This is how institutional adoption happens: invisible infrastructure upgrades, maintaining familiar user experiences. The Azure HCM partnership reveals even larger scale. Azure serves 4 million customers across the United States, providing HR and payroll services. In September 2025, Zebec announced joint venture with Azure for stablecoin payroll tools. This isn't pilot program. This is production integration targeting Azure's existing 4 million customer base. When Azure integrates Zebec's streaming payment infrastructure, their 4 million customers gain access to real-time payroll settlement through stablecoin infrastructure. Businesses can pay employees in USDC with instant settlement. Employees can access earned wages continuously instead of waiting for paychecks. And Azure differentiates from competitors still using batch payment processing. Here's why this matters for supply chains specifically. Many Azure customers are small and medium businesses operating in supply chains. Manufacturers, distributors, logistics providers, these businesses have complex payment needs. They pay employees, they pay suppliers, they receive payments from customers. All these payment flows create working capital challenges when processed through traditional batch systems. Zebec's infrastructure enables these businesses to streamline entire payment operations, pay employees through streaming payroll, pay suppliers immediately upon delivery instead of net 30 terms, receive customer payments in real time instead of waiting for checks to clear. The entire supply chain payment cycle accelerates, reducing working capital requirements and increasing operational efficiency. Let's examine the Paybridge platform that Zebec operates for US charter schools. Paybridge serves thousands of US employees across multiple states, providing real-time payroll access. This isn't future technology. This is operational infrastructure processing actual payroll right now for American workers. According to Zebec's documentation, Paybridge processed over $52 million in transaction volume in recent 4-week period, approximately $624 million annualized run rate. This is real money moving through Zebec infrastructure for US payroll specifically, not speculative adoption, not pilot programs, actual operational volume serving American workers. The geographic distribution matters. Paybridge operates across multiple US states, serving diverse industries, education through charter schools, healthcare through various clients, professional services. When infrastructure scales across industries and geographies, that's not niche adoption. That's becoming standard infrastructure embedded in American business operations. Here's the Card acquisition dimension. In May 2025, Zebec acquired Card, bringing thousands of education sector users into their ecosystem. Card served educational institutions with payment and financial services. This acquisition expanded Zebec's education sector presence alongside school payroll services, creating dominant position in education payroll and financial services. Why does education matter for supply chain integration? Educational institutions are massive procurement operations. Universities and school districts purchase goods and services from thousands of suppliers: food services, technology equipment, facilities maintenance, transportation. These procurement operations face same supply chain payment challenges as manufacturing or retail. When Zebec embeds in education sector through school payroll services and Card, they're positioned to expand from payroll into procurement payments. Schools already use Zebec for payroll. Next logical step is using Zebec for supplier payments, creating complete institutional payment infrastructure. This is how enterprise adoption expands. Start with one use case, expand to adjacent use cases within same customer. Now let's talk about the Mastercard partnership and how this connects to US supply chains. Zebec Carbon Card, powered by Mastercard, operates in 26 countries, including eventually the United States. This card enables users to spend crypto at 80 million merchants globally through Mastercard's network. For supply chain participants, this creates immediate utility. A supplier receives payment through Zebec's streaming infrastructure in USDC. They can immediately spend those funds using Zebec Card at any business accepting Mastercard. No need to convert crypto to fiat through exchanges. No waiting for bank transfers. Instant settlement to instant spending capability. This closed-loop system is how blockchain payments achieve mainstream adoption. Supplier receives USDC payment. Supplier spends USDC through Mastercard network. No friction, no conversion delays, no thinking about blockchain technology. Just faster, cheaper payment infrastructure that happens to use blockchain rails underneath. The zero-fee structure particularly matters for supply chain payments. Traditional payment processing charges merchants 2 to 3% per transaction. For supply chain businesses operating on thin margins, these fees significantly impact profitability. When Zebec offers zero-fee transactions with Mastercard acceptance, businesses save meaningful amounts on payment processing costs. Consider a distributor processing $10 million annual revenue. At 2.5% processing fees, that's $250,000 in annual costs. With Zebec's zero-fee infrastructure, that entire $250,000 becomes additional profit or can be passed to customers through lower prices. This creates competitive advantage for businesses adopting Zebec infrastructure. Here's the stablecoin dimension that makes US supply chain integration feasible. Zebec operates exclusively on USDC, the stablecoin managed by Circle with reserves held by BlackRock. USDC provides dollar stability while enabling blockchain settlement speed. Supply chain businesses don't face crypto volatility risk because payments happen in dollar-pegged stablecoin. The Genius Act, passed in July 2025, created federal framework for stablecoins requiring full reserve backing and monthly reporting. USDC complies with these requirements. When Zebec processes payments through compliant stablecoin infrastructure, they meet regulatory standards that traditional businesses require. This removes major adoption barrier where businesses feared regulatory uncertainty. Circle's May 2025 certification of Zebec as Alliance Program member formalizes this relationship. Circle holds significant ZBCN according to official statements. When stablecoin issuer holds material position in payment infrastructure token that signals strategic alignment. Circle benefits from Zebec driving USDC transaction volume. Zebec benefits from Circle's regulatory compliance and institutional relationships. Let's examine the Zpin point-of-sale terminal that Zebec is deploying for US merchants. Zpin enables businesses to accept real-time USDC payments with instant settlement. This is physical hardware infrastructure deployed in American retail locations, not just software. For supply chain integration, point-of-sale infrastructure matters enormously. When manufacturer sells goods to distributor, payment can happen instantly at point of delivery using Zpin terminal. No invoicing, no net 30 terms, no payment delays. The distributor takes possession and pays simultaneously through instant USDC settlement. This transforms supply chain finance by eliminating payment timing mismatches. Currently, goods delivery and payment settlement are separated by weeks or months. This separation creates financing requirements throughout supply chain. When payment happens simultaneously with delivery through instant settlement, financing needs decrease and capital efficiency increases. Now let's address the compliance dimension that enables US enterprise adoption. Zebec completed SOC 2 certification in September 2025. This security standard is required for enterprise financial infrastructure. American businesses can't deploy non-certified infrastructure without creating security and compliance risks. SOC 2 certification required independent audits of Zebec's security controls, data handling, and operational procedures. This isn't checkbox compliance. This is rigorous verification that infrastructure meets enterprise security standards. When Zebec passes SOC 2 audits, they're signaling to American enterprises that their infrastructure is institutionally viable. Additionally, Zebec acquired GateKnox in 2025 for native KYC, KYB, and AML compliance. This embeds regulatory compliance directly into payment infrastructure. When businesses use Zebec for supply chain payments, compliance happens automatically. Identity verification, anti-money laundering checks, and regulatory reporting occur seamlessly without manual processes. For American businesses operating under strict financial regulations, embedded compliance is critical. They can't adopt payment infrastructure that creates regulatory gaps. When Zebec provides native compliance through GateKnox integration, they remove major adoption barrier for regulated industries. Here's the payroll growth partner strategy that reveals Zebec's roll-up model. Through this investment vehicle, Zebec acquires traditional US payroll companies and integrates Web3 capabilities. School payroll services was first acquisition. Future acquisitions will follow similar pattern. Identify established payroll providers, acquire them, integrate streaming payment infrastructure. This is brilliant enterprise adoption strategy. Don't try to convince businesses to abandon existing payroll systems for crypto infrastructure. Instead, acquire the payroll systems businesses already use and add crypto capabilities underneath. The business continues using familiar interface. Zebec gains embedded distribution through acquired companies' existing customer base. If Zebec acquires 5 to 10 payroll companies serving 50,000 to 100,000 total employees, they suddenly process payroll for meaningful percentage of American workforce without requiring single business to make active adoption decision. The payroll company they already use simply offers enhanced real-time payment features powered by Zebec infrastructure. Let's examine what actual users report about Zebec's US operations. According to platform metrics, over 10,200 employees actively use Zebec's streaming payroll monthly. These are real American workers receiving actual paychecks through Zebec infrastructure. Not beta testers, not crypto enthusiasts, traditional employees who happen to work for companies using Zebec-powered payroll. User testimonials from Paybridge users describe accessing earned wages immediately instead of waiting for paychecks. Teachers mention paying unexpected car repairs or medical bills using real-time wage access. This is real utility delivering tangible value to American workers facing cash flow challenges. The scale matters because network effects compound as adoption increases. When 10,000 employees use streaming payroll, that's interesting. When 100,000 employees use it because Zebec acquires more payroll companies, that's significant. When 1 million employees use it as Azure's 4 million customers gain access, that's becoming standard infrastructure embedded in American payment systems. Here's the geographic expansion pattern. Zebec currently operates in UK and 26 European countries with Zebec Carbon Card. US expansion is planned but not fully launched. However, payroll infrastructure through school payroll services, Science Card, and Azure operates in United States now. This creates interesting dynamic where Zebec embeds in US supply chains through payroll infrastructure before their consumer card product fully launches in America. By the time Zebec Card becomes available to American consumers, the underlying infrastructure already processes hundreds of millions annually for US businesses and employees. When consumer card launches in US, users won't need education on what Zebec is. They'll recognize it as the infrastructure their employer already uses for payroll. This bottom-up adoption through enterprise payroll before consumer products is reverse of typical crypto adoption patterns. Most projects target consumers first, fail to achieve scale, then pivot to enterprise. Zebec is embedding in enterprise first, then expanding to consumers. Now let's address the challenge nobody discusses. Supply chain participants won't adopt blockchain payments unless their trading partners also adopt. This is classic network effect problem. Individual business can't realize benefits unless their suppliers and customers also use same infrastructure. Zebec's strategy solves this through horizontal integration. By acquiring multiple payroll companies and partnering with HCM providers like Azure, they're simultaneously onboarding thousands of businesses across supply chains. When manufacturer, their suppliers, and their customers all use payroll systems powered by Zebec, they can extend streaming payments to B2B transactions because everyone's already on same infrastructure. This is how payment networks achieve critical mass. Visa and Mastercard didn't ask every merchant to adopt simultaneously. They built critical mass of acceptance locations, making cards useful to consumers, driving more merchant adoption in virtuous cycle. Zebec is building critical mass of payroll users, making streaming payments useful for B2B transactions, driving more business adoption. The Onodo Finance integration adds another dimension. Onodo provides yield-bearing stablecoins backed by US treasuries. When Zebec integrates with Onodo, businesses can hold USDC in yield-bearing form, earning treasury yields while maintaining instant payment capability. For supply chain businesses managing working capital, this matters significantly. Instead of holding non-yielding cash waiting to make payments, They can hold yield-bearing USDC, earning 4 to 5% annually. When payment needs arise, they can instantly convert yield-bearing USDC to payment without delays. This improves treasury management for businesses using Zebec infrastructure. Let me be crystal clear what we're not saying. We're not saying Zebec dominates US supply chains. We're not saying adoption is guaranteed. We're not saying price moons immediately. We're analyzing documented evidence showing Zebec embedded in American payroll infrastructure, serving over 10,000 employees, partnered with platforms serving 4 million customers, and acquiring traditional payroll companies to expand distribution. What we are saying, real operational volume exists. $300 million annually, $52 million in 4 weeks through Paybridge, 10,200 active employees, school payroll services, and science card serving education sector, Azure partnership targeting 4 million customers, SOC 2 certification enabling enterprise adoption. These aren't future promises. These are current operations embedding Zebec in US business infrastructure. The current price of ZBCN doesn't reflect this operational reality because markets don't yet recognize how enterprise payroll adoption creates network effects, enabling supply chain payment integration. By the time Zebec's US presence becomes obvious through public announcements from major corporate clients, institutional capital will have already positioned. Now, you understand how Zebec is quietly integrating into US supply chains through payroll infrastructure acquisitions. You understand why streaming payments solve working capital problems throughout supply chains. You understand the roll-up strategy through payroll growth partners acquiring traditional payroll companies, and you understand how bottom-up adoption through enterprise payroll enables eventual consumer and B2B expansion. If this supply chain integration analysis revealed adoption patterns you weren't seeing, smash that like button. And if you want exclusive intelligence on enterprise blockchain adoption before it becomes obvious, click join next to subscribe, select the Plan Club membership, drop a comment. Is Zebec embedded in US supply chains, or is this overstated? I read every comment. See you in the next one.